Hey everyone, how's it going? We had another very directional day where we moved downwards into that FOMC meeting announcement and then upwards after that. So that was a little bit surprising, that directional movement down into the FOMC meeting. So there was probably a little bit of fear that we might not like what was inside of that report. And it turns out there were no surprises. And so we reversed back up and we started trading into actually closing on the highs again. So let's take a look at that and see how that played out. So we see that we opened and then just traded all the way down into the FOMC meeting report, which was this large green bar right here. We had volatility throughout the day. We were expecting a little bit more muted volatility going into the announcement, but that wasn't the case. We were just steady volatility, actually a little bit quieter towards the end, or at least a lot more steady. So once certainty came into the market, we got a little bit less volatile, although we had that initial spike in volatility, but that tapered off and we ended up at the highs of the day. So I believe that's multiple days, with the probably exception of yesterday where we traded at the highs. So right here, we closed very close to the high, closed very close to the high. Today, once again, closed very close to the high. And there's been some negative news in the markets. We've had the Israel-Hamas conflict. We had a PPI coming in hotter than expected. We've had a few things, some Feds saying that we need to continue to move rates higher, but we've shrugged all of those things off. The buyers are coming back in and coming back in strong, and so what we might expect is each of those negative news items, there are some people who are accumulating shorts, and with each of those negative news items, they're getting hurt. So these buyers coming in and driving the prices higher, that is going to start squeezing the shorts. And a very important psychological point for those people who are getting squeezed by the shorts is this MA50 point. This is a major line that basically every single institution looks at. So if we break above the MA50, we can expect a pretty strong squeeze higher. So we'll have to see in the next coming days how quickly we hit that MA50, whether we cross it and move upwards. And if we do, I would expect basically zero resistance and a quite strong movement, maybe to this resistance point right here, maybe to this resistance point right here. But overall, it's looking more and more bullish for the overall indices. S&P 500, QQQ is looking very strong as well. Same thing that I said applies over here, right over here. Like anyone who had shorted during this time period with the negative news is really starting to feel it, is really getting hurt right now, and this might start jumping higher quite rapidly. Let's take a look at the Dow Jones. Dow Jones at its MA200. So again, there could be some stops right here. And if we blow through that, then this could move strongly higher into the MA50. And then let's look at the small caps. Small caps is being limited by the EMA 20 at the moment. But we won't expect a truly strong market until we have the normal relationship of growth stocks and most speculative stocks leading the way upwards. That's not the case right now. So we won't expect a true bull market until this goes up above the MA200 and MA50, and then up again above these highs right here where I have this pink line. But that's quite a bit of distance to go. So if we waited all the way until then for us to signal a bull market, we would miss out on some pretty big moves right here. So we want to dip our toes in, stay shorter term, and then make sure we position ourselves appropriately with risk. So there's still risk of volatility. There's still risk of outside news events driving prices down or up temporarily. So we want to make sure when we risk size at this particular moment in time, we are just taking the maximum loss into account. Right now, if we're looking at sectors, we've been doing the sector analysis ever since the event over this weekend, which was the Israeli-Hamas conflict, and we see that bonds are doing really well. They've caught quite a bid, and then today, suddenly XLU, XRE have spiked up. So if I take a look at XLU, utilities, a strong movement upward during this period of time. It didn't quite get to the EMA 20, so before I got too excited about XLU, I want to see that cross above that EMA 20. XLRE is doing much better. It has crossed that EMA 20 at this point, and so I'd be looking for opportunities in XLRE. What has also performed quite strongly during this time period is SMH and XHB, which I've got highlighted here already. You can see that SMH is up 2%, XHB is up 3.46%. XHB is right up there with XLU and XLRE, but SMH not quite as much. The first couple of days, SMH was definitely at the top, but today we switched focus more over here. So with the announcement of the Fed meeting, the focus is a little bit more on interest rates, and these sectors are a lot more sensitive to interest rates. So I expect SMH to catch back up over the remainder of the week or maybe next week, because there has been a lot of interest in the semiconductor sector, not only in the past week, but over the past quarter, the past 2, 3, actually 4 quarters. There's been a lot of interest in SMH. So that's what I'm going to be looking for. At this point in time, I'm still looking only at the sectors, and I'm not looking at individual stocks just quite yet. So I would start positioning myself in SMH, which has crossed above all of its moving averages at this point. So there's no real technical resistance. There is only supply side resistance, supply demand resistance. So maybe I'll be looking for SMH and XLRE opportunities later this week. Today I'm probably going to look more at earnings because we have earnings season starting. So the opportunities I'm going to be looking at are going to be in that earnings. Is there anything else? Let's take a look at TLT. Let's make sure we're on track. So TLT bonds gapped up and came close to its EMA 20. So we're going to watch this very carefully if it can cross above the EMA 20, or does it bounce and resume its downward trend from here. That's going to be pretty important. So that this takes precedence over everything I just said. Okay, so if we start moving very strongly downwards, that's going to put pressure on stocks again, and then it's going to make it harder for us to reach new highs. So we might end this upward movement at the MA50 if that happens, or at this first supply demand resistance right here. So if we don't, though, if TLT can cross that EMA 20, then we are potentially clear to get maybe as high as the recent highs over here. Okay, so let's take a look at let's take a look real fast at our day trading. I don't want to forget that. This morning we looked at Google. I lost my lines somehow. So we had this lines right here. Okay, and you can see that this is just broke out and just went screaming higher. So this would be definitely one of the ones where we talked about this morning where we're just looking at a breakout and momentum. So you would have entered on this first bar. That's a huge green bar with plenty of volume. So we would have been in at some point on this bar. So let's just be conservative and say at the close of that bar, you would be in. And if we look at our Heikin-Ashis, we would just look for areas of consolidation or that Heikin-Ashi. So let's just do the easier one. Okay, 1, 2, 3, 1, 2, 1, 2, 3, 4, 5 right here. So this would be 7 a.m. So if you were in this, you would be in right at the close of this opening bar or sometime before that, and then at 7 a.m. we would be out. So within half an hour of the open, we would have taken our money and left right here. So that is a nice gain right there. That could be your entire day right there, from 140.4 to about 141.35, so about $1. That is a great multiple right there. So your options, you multiply that, or even if you were just doing shares, Google's expensive to do just shares, but this is definitely a nice juicy gain in a day trade. Let's take a look at plug. Plug, you would have done a pullback, right? So it would have come down, come back to our purple line right here, and then trended downwards, and we would have caught this move right here. So we'd be in on this bar right here at 648. And then we'd be out at 5 green bars. 1, 2, 3, 4, 5 right here. 720, 648 to 720. Okay, 648 to 720. There. Okay, so that is from $7.76 to $7.55. That's 20 cents on 770. Okay, so it's about a 2.5% move. Take the option and multiply that. That would be about a 20 to 40% move right there. So that's a good morning as well. And then if we look at ExxonMobil, we would have done the same thing. Okay, come down. We would have consolidated around here, and so you could have entered at any one of these points and then caught this momentum downwards. Let's see if it would have been a significant move, though, if you followed the Heikin-Ashi. 1, 2, 3, 4, 5. It would have been a baby move, just a baby move. Okay. And then Palantir. Palantir, huge surge upwards in the morning, so that would have been it. That would have been the momentum that we were looking for, especially as it broke above this purple line right here. But this surge upwards in the first 2 minutes would have been enough for you to say that we're breaking out. So I'm not gonna, well, I guess I'll do it real fast. Okay, here would be a little difficult because it came down so fast. Okay, so if you followed the 5 Heikin-Ashi, then you would have had a small gain right here. And then the other option of exiting is if you see rapid downward movement, you might not want to wait for the Heikin-Ashi. So the other is, hey, I started consolidating. I was consolidating in this area for a while. And then if I start seeing the first 1 or 2 Heikin-Ashis, then I would be out because I'm leaving an area of consolidation. Okay, but in any case, if we just follow the Heikin-Ashi, that would just been a baby trade as well. So ExxonMobil and Palantir, we'll just chalk those up to baby gains. And Google and Plug, we got significant gains out of it if you're playing the day trading game. So most days I'm not, just because I like the freedom and I'm looking at a whole bunch of other things. So most days I'm not day trading. So when I do day trade, I will show you my live results. Okay, so let's take a look. So the big thing that is happening right now, other than all the news items, is we're starting the earnings season. So I already showed you one of my favorite ways to play earnings on Google. I don't have Google, that's not the right, June 9th. This was a long time ago. Oh, I'm looking at the expired ones. Active. We did a Google Still not here. Huh. I guess I may have forgotten to save the trade. That's unfortunate. I'll look it up. I'll look up what we did last week as a Google trade, and so we can track the performance of that. Google earnings are not quite here yet. There's still some time in that trade, so that one we were planning to trade out of just before earnings. I'll have to go back and review the videos and see what we actually put on, and then we can track that progress. So for today, I'm going to show you a different method that I like to use during earnings. It's actually my favorite method. So in this one, we actually hold it through earnings. So I want to find out who has earnings tomorrow, and I would have traded this immediately before today's close. Okay, so just to show you, I will use an example. Actually, let me go through this first. So I can go onto FinViz. I can look for any that has earnings tomorrow, or today after close, or tomorrow before market open. So today after close, there's RELL. I don't know what this is, so I wouldn't be playing it. And it's definitely not in any major index, so I wouldn't be playing this one. So tomorrow before market, we have quite a few. And again, I'm only looking at the ones that are traded in the major indices. So Fastenal, WBA, Delta Airlines, DPZ, Fastenal, WBA. So today, personally, I was looking at these two. And I will show you the one I didn't do, or I actually consider both. I like them both. And I'll show you the example based on the one I didn't do, and I'll show you the trade that I actually did. Okay, so the one I didn't do was Delta Airlines. So we go over here, we look at Delta Airlines, and we see that we have earnings coming up tomorrow before market. And I want to actually hold and take advantage of it. The trouble is that right before earnings, you have huge implied volatility. Market makers know this. Market makers are there to make money for themselves, not for other people. So what they do is they take their spreads, they price their options so that the way that most people play earnings would not be able to make money. Because if they made money, the market maker would lose money, right? So what we have to do is say, hey, what do most people do? Most people would take a look at something like Delta Airlines, and they would either say, okay, I think I know where Delta Airlines is going to go. I think it's going to go up, or I think it's going to go down. If you did that, then you would just buy a call or buy a put. Okay? Most people, they know that that earnings introduces uncertainty, and they're not too certain of the direction. So they might do something like a strangle, and they say, hey, well, I don't know if it's going to go up or down. I'm going to buy both a put and a call, and that way, if it moves significantly, like if we gap way up, then one of them is going to gain more money than the other one loses, and that's how I'm going to make money. That's how majority of people play earnings. And market makers know that that is happening, and so they price their options really high. So you have to have a huge gap up in order to make money on a strangle. Okay, so we can't do it that way because market makers already know that game, and they make it very difficult for you to make money on it. So we need to come up with a different structure. So let's just say I believe that Delta Airlines can make it above 37.50. Okay, so that it could go up to at maybe 37.50, but above that is going to be a stretch. Right, so I don't think it's going to make huge, ginormous moves, but I do think it's going to move quite significantly. Right, and this is a good area of consolidation right here. We have multiple days highs right around here, and so even if earnings are amazing, we would likely hit an area of resistance right here and wouldn't gap like way above this unless everyone in the world is using Delta Airlines this season. So this is a good cap right here. Another way that I can look at that is any ticker that has upcoming earnings. You will see this MMM appear on platforms like Thinkorswim. A few other platforms have it. I think Tasty Trade might have it as well. But other platforms, you will see this market maker move, the implied move. They believe that it will move $1.42 or less across earnings. So that means unless Delta Airlines moves more than $1.42 because of its earnings, then if you go in and you buy a strangle, you're going to lose your lunch. You're going to lose a bunch of money unless it can go beyond what the market maker thinks it can go beyond, right? So I can take this, add it to the closing price right here, and say, hey, that's $37.42. So the market maker doesn't think we're going to go beyond 37.42. I marked 37.45 right here. So now I want to form a trade that makes money if Delta Airlines lands anywhere at 37.45 or below. Does that make sense? So I want to be like the market maker. The market maker makes money if this price doesn't go as high as 37.45 or 37.42. The market maker will also make money if it doesn't fall as low as 30, where do we end at? 35.98, so minus 142, so that would be 34.56. Okay, so maybe I'll draw that line as well. Okay, 34.56. All right, so market maker makes money as long as prices fall in between these two lines. I want to do a little bit better than a market maker. I want to make money if it as long as it stays, like if it gaps down because earnings are terrible, I want to make money as well. So as long as Delta Airlines doesn't put in amazing numbers and go above 37.45, I'm going to make money. And that happens to align with my view of Delta Airlines. I don't believe that they can beat earnings by a lot. In fact, I think that it's more likely that they're going to miss earnings because people are not traveling as much. Interest rates affect the fuel price. Sorry, not interest rates. Oil prices affect the fuel prices of travel companies, of airline companies. So it's becoming a more expensive for them to operate. It's going to be more difficult for them to make earnings this season. So I believe the downward direction is more likely, but I have this cushion. I believe that the market maker could be right, and we might not go as high as 37.45. So how would I take advantage of this information? I would have to build something that allows me to make money below 37.45. Right? So there's I could build a vertical, but the problem with the vertical is that if I'm wrong, I'll probably lose a lot more money than I make. So instead, I'm going to do what is called a broken wing butterfly. And this is the wrong ticker, so Delta Airlines. So I'm going to sell calls where I think it might not go above. I didn't think it's going to go above 37.45. 37.5 is pretty close to that. And then I'm going to just kind of go down and span that price. So I'm going to go, in this case, I move one strike below and two strikes above. And remember, it's an unbalanced or broken wing butterfly, so that's why they are not equidistant apart from each other. And for the one that that is higher, I'm going for two of those. And then for this contract that is lower, that I'm shorting, I'm going to sell three of those. And that gives us a really interesting structure here. So as long as we stay below this break-even point, which is at 37.84, remember 37.45 was where the highest we believed that it would go above. So as long as we're below 37.84, then we make money. How much money? Well, if it's significantly below that, then I make $17. And then at its peak right here, I can make $67. Now I take a look at my potential. If we gap up and we're completely wrong, we might lose $133. But 67 over that 133, that's about half. Actually almost perfectly 50%. I can make 50% on my risk, or if it goes way down, then I can make $17 on 133. That's about, what is that? Over 10%. That's about 13%. So no matter what, I have this huge margin of safety where I can make at least 13%. I can make up to 50%. And as long as the market maker is correct, which the vast majority of the time they are correct. They're the ones setting the prices, and they have huge sophisticated computer models and supercomputers running these live and to come up with their values. So they are by far more often right than they are wrong. And just by using the market makers calculations, since they publish it to us anyways, why not use them? And I can set up this trade that can be very lucrative and not risk too much money. So I want to make sure that my portfolio can absorb $133 of risk, and then I will look forward to making at least 12 or 13% and up to 50%. And the great news is, when does this expire? It expires on the 13th. Today's the 11th. So that means within 2 days, I can expect that type of return. So this is my favorite way to play earnings. And we'll see. We'll see how this performs. We're going to save this trade. This is going to be a after market earnings trade. And then just to show you really quickly, because I said I would, I did with real money, I did a actually I did Delta Airlines. Never mind. I guess I should have shown you the other one, which was, I believe, was Domino's. But in any case, you can see, so you can compare my live one, where I did 30 exactly this same spread, okay, and I paid $39 for it. So I actually did a little bit better than what we just did in we just went through live. Okay, so here just a tiny bit better. We're up $1 already versus break even. So you can see that I showed you exactly what I actually executed on. So we'll track that tomorrow and see how well we do, and then tomorrow decide if we're actually going to hold it into expiration on Friday. And I think that'll be fun and interesting to see how well an overnight trade can perform. All right, guys, hope you're learning a lot. Let me know if you have any questions, and otherwise I will see you tomorrow in the pre-market, and by then we should have initial results for our earnings trade. So that's why these trades are one of my favorites, because they're fast. They're super fast. You get your results really quickly. You don't have to sit there and wait and see how well it performed. Okay, I'll see you guys tomorrow morning.